Good morning, ladies and gentlemen, and welcome to the GELION investor presentation. Throughout this recorded presentation, investors will be in listen-only mode, and this meeting is scheduled for around 30 minutes. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question at any time and press send. The company may not be in a position to answer every question it receives during today's meeting. However, the company will review all questions submitted today and will publish responses on the Investor Meet Company platform. Before we begin, we'd like to submit the following poll, and if you would give that your kind attention, we would be most grateful. And I'd now like to hand over to Stuart Rayner, Commercial Director, and Andrew Grimes, CEO. Good afternoon, or good morning, should I say, to you both.
Hi there.
Thank you very much, Mark, and thank you everybody for your time this morning or this evening, wherever it may be that you are. Today's presentation is mainly to talk about the announcement which went up to the market yesterday regarding our agreement with Aseona. But I thought I'd take sort of 5 or 10 minutes before that just to sort of give a recap on the company for those of you who are not as aware of what we do, and also to just let you know some of the things that we've been up to since we listed at the end of November on the AIM. So as you all know, I'm sure, GELION is a battery technology company really looking to play a part in the technology revolution that is well and truly underway as the world decarbonises. If I can just briefly, a slide about the leadership team, and then I'll talk a little bit about the company. Our founder, Thomas Maschmeyer, is a professor of chemistry at Sydney University. We are his 6th startup. He's got currently approximately 2 billion Australian dollars worth of companies that he was involved in starting up. So real serial offender when it comes to startups. The winner of the Prime Minister's Prize for Innovation in 2020 and one of the world's top 15 chemists. So very, very inspirational leader and founder, and very happy to have him as part of the team and one of our directors. Steve Mann, our chairman based in the UK, very experienced energy professional, founded Armstrong Energy, that very involved in clean energy. Amit Gupta, our CFO, came across to us from Deloitte, very, very experienced in helping listed companies, and a great safe pair of hands for us. And on this call tonight, we got myself as CEO and Stuart Rayner, our commercial director. In terms of the company and just a brief overview, as I said, perhaps some of you not super aware of the company or what we've been doing. We listed on the AIM at the end of November last year. We raised 22 million, which gave us enough funding for a runway through to an EBITDA break-even point in 2024. And the company has 2 divisions. You know, tonight's announcement is geared around our stationary energy storage division. That was what the company was founded around. We have some amazing technology around zinc bromide chemistry targeting the stationary energy storage market, and that's a hugely growing market. The compound annual growth rate's 25%, and every time these numbers come out, they get bigger and bigger. So that was the first part of our business, the stationary energy storage market. We have a second division, and that's around performance additives. And here, rather than making batteries as we are with the stationary energy storage, we're actually producing additives to improve the performance of either lithium-ion batteries, this is normal batteries, lithium batteries that you find in your laptops and so on, or lithium-sulfur batteries, a tech that holds a lot of promise due to its high energy density, but until now, lithium-sulfur batteries don't last as long as they need to. We've got additives to improve that. So really, really diverse business, but all of it's to do with energy storage and improving, helping green up the energy that the world is using. In terms of the milestones, some of the people on this call we may have spoken to towards the end of last year, we put this slide together at the start of 2021. And really happy to say that all of those objectives that we set ourselves in 2021, we achieved. Whether that was signing agreements with lead acid manufacturers to make our product, whether it was to get pilot manufacturing in place, doing some demonstration deployments, or obviously doing the IPO. Really pleased to see that we managed to achieve all of what we set out to do. That takes us through to 2022. And we're in the process of getting our first product out of two new factories, one in Australia here and another one in India. And we'll be manufacturing 500 kilowatt hours of product in the second half of the year, and getting that into the hands of customers for test and approval. And on the silicon nanoparticles, it's about demonstrating the performance in pouch cells. And as I said, that takes us through through to 2023, commercializing and so on. But look, that's what our focus is on at the moment. It's around scaling up that zinc bromide, building commercial relationships, and it's around proving the performance of the additives for those lithium markets. One of the other things that I thought was worth just briefly taking a side trip into, while we were doing the presentation back in November, we were highlighting that one of the key risks around lithium is the enormous demand for lithium batteries going into the electric vehicle market. And what that was very likely to do was to drive prices up, number one, and also make supply chains really squeezed. And this graph you can see in the bottom left-hand corner, that little arrow you can see, that was around about the point where we were talking to investors and interested parties and saying, there is going to be a supply chain squeeze here. Well, you can see what's happened to pricing in, this is lithium carbonate, one of the key inputs. You can see what's happened to pricing in the subsequent months. And that's having a knock-on impact into batteries. BYD just announced a 20% price rise due to raw material cost increases. But it's also having a really important impact into delivery times. We're seeing delivery times for stationary energy storage, lithium-based batteries, going out to 18 months and longer in Europe. And this is what we predicted was going to happen. And it looks like it is happening, and certainly happening to a pretty large extent. If I show you another graph, that's really quite an interesting one. That this has come from benchmark forecast. This is showing, the black arrow there is showing the projected lithium demand through to 2040. The dark teal is showing current global production of lithium, and the light green is showing sort of best case probable lithium production. And what you can obviously see is this enormous shortfall between what the projected demand is and what the projected production is. And so that squeeze that we saw evidence of in my previous graph, this is just predicted to continue. And this is why one of the key reasons, not the only reason, but one of the key reasons why we feel that other technologies for long duration energy storage are going to become more and more important. What I'll do now is I'll pass over to Stuart Rayner. Stuart's been our key contact for the work with Aseona, which is, as I said, the reason why we're speaking to you today, the announcement that we put out yesterday morning. I'll pass over to Stuart, and Stuart can take you through some more details around that.
Great, thanks Andrew. Hi everyone. So we're really excited about this announcement. Aseona is one of Europe's largest renewable energy companies, and we've just signed a test and trial and supply agreement conditional with Aseona. We believe this agreement could be worth gigawatt hours of batteries to GELION in partnership with Aseona over time. So really great commercial outcome potential. I'll just bring you into, give you a little bit of a snapshot of Aseona for the people who don't know the company. Aseona Energia was spun out of parent company Aseona last year at around about June. You can see their market cap, pretty significant, 9 billion euro, revenue back in 2020, 6 billion. And they've actually been, they're great providers in the renewable energy sector, but they're also ranked as the greenest utility in the world for the last sort of 6 years. And one of the things we really like about that is the synergy of that aspect with GELION, in that we've just had an independent report completed on our carbon footprint for our batteries, and then the benefit that we provide by deploying those batteries into the market. And we score extremely well against lithium ion and other key battery technologies. And that report we'll be providing to everyone on the call today, together with a copy of the slide deck. So that's just a little bit of extras in terms of the synergy between ourselves and Aseona in terms of very green organisations. In terms of their power generation, you can see they're 11 gigawatts in terms of power generation as of 2021, and they're looking to get up to 20 by 2025. You can see the split there in terms of renewable type, very big on the wind, solar starting to build, and a bit of hydro. The company's global. They're operating in 16 countries. Obviously, Spain is headquarters, but big operations here in Australia, US, Canada, various parts of Europe, South America, and India and Africa. Next slide. So in terms of the contract, what's happened here? So we've broken this up into 3 key areas that we'll talk to you about, being the selection process, the test and supply agreement, the synergies and potential of this agreement, and some other core aspects of the deal. So in terms of our connection through to Aseona started back in 2019. We were talking to local people here in Australia from Aseona, and we met with their energy storage execs, and they were over from Spain in Australia. We got on their radar. And in 2020 September, they did a global search of breakthrough battery technologies across the world. And they took in all of that information. We responded, we were part of this process. It went for about a 12-month evaluation of our technicals and our product specs and what direction where we were heading. And there was a short list of 10 vendors, and that was scaled down to 4, and we're one of the 4. So we're one of the first organisations that's going to be doing test and trial with Aseona. And based on success, there's a supply agreement associated with it as well, which is fantastic. What we're going to be providing is Gelion's zinc bromide non-flow battery. It's a 6 to 12 month test program. And of course, like our investors and our customers, we want to move through that absolutely as quickly as possible, ticking all the boxes, working with Aseona in the best way. So it's a 6 to 12 month. We'll be leaning toward trying to complete everything within the 6 months if possible. And that's going to kick off this year in Q3 2022. So then, the great thing with being able to team up with Aseona is helping us with speed to market on a global basis. Currently we have manufacturing partners in India and in Australia, and our Indian manufacturer can provide batteries for us in other jurisdictions. Plus, part of our business strategy is to sign up additional battery manufacturers in the US and in Europe. So we'll be expanding that, but the agreement with Aseona is all about offtake on a global basis, and you saw the countries that they're operating in. So this is what helps us accelerate getting our footprint out globally. Obviously, future revenue opportunity significant, helps to demonstrate that our business model around partnering is successful, and I've spoken about the ESG synergies earlier. So in terms of the deal aspects, Aseona, they have a test facility that's located in northern Spain. They've got a 1.2 megawatt solar PV farm, which is linked to their test facility, and that's where we'll be providing our battery. So our battery system, based on the specs that they are after, 25 kilowatts, 100 kilowatt hour battery system, that'll connect into their power electronics and into the solar PV farm. There's a rigorous test program that's been mapped out as part of the agreement, and based on successful completion, that'll really position Gelion to form one of the key battery partners for Aseona going forward. So that could well be multi-gigawatt hours of batteries in the future. If you look at the scenario with them at the moment, they've got about 11 gigawatts of installed base. So they're able to go back to that installed base, run the ruler over it, and find the best opportunities for Gelion's batteries to go and implement them. Then they're moving forward over the next few years through to 25 to get to 20 gigawatts. And that's all about new battery opportunities in new solar farms, wind farms. And in Australia, for instance, with the developments for new renewables projects, every renewable project, for it to get approved, it needs to be battery ready. So it's either a battery sold at the time of the solar farm, wind farm being put in place, or it's battery ready such that the right land is available, connectivity, etc., is there, so the batteries can be put in the future. So there's some of the key aspects, and we'll be working really hard to get great test results and then move forward to the next phase, which will be upon successive testing results, mapping out forecasts, quantities, and dollar value of the contract to us. Next slide.
That's the last one. Thank you.
That's great. Andrew, Stuart, thank you very much indeed for your presentation and updating investors this morning. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while Andrew and Stuart take a few moments to review those questions submitted already, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, will be available via your Investor Meet Company dashboard, and we'll notify you when they're ready for your review. Andrew, Stuart, obviously, investors had the ability to pre-submit questions. You have a number of those, and you've also received a number of questions throughout today's presentation. Perhaps if I may hand back to you, and if you could read out the questions and give a response where it's appropriate to do so, and then I'll pick up from you at the end.
Sure. Okay. I'll read them out. I think most of these are related to the commercial side, so I think they're ones for you, Stuart. But here's one. Apart from supply issues, what are the anticipated competitive advantages of the zinc bromide chemistry? Sure.
Okay. Yep, thanks for that. Zinc bromide chemistry, one of the great things about the zinc bromide chemistry is safety. So the electrolyte doesn't catch fire. There's no thermal runaway or explosion. So unlike, unfortunately, lithium-ion batteries, we've all seen a number of different articles in the news catching fire and exploding. Gelion zinc bromide non-flow batteries, we leverage the zinc bromide electrolyte, which is proven from the flow batteries historically, and we package that up in a lead acid battery style block of energy so that we can keep the costs down. And the electrolyte doesn't catch fire. It's very, very safe. And we're finding that not only companies like Aseona coming to us for stationary energy storage batteries for renewables, firming, and arbitrage type applications, we're also finding a number of customers coming to us for green hydrogen production because they want to have very, very safe batteries involved in that process. So for the people who aren't aware, green hydrogen production, which is obviously a big theme that's out there globally, you have an electrolyzer that splits the water into hydrogen and oxygen, and you power that electrolyzer using renewables, so solar or wind. In the evening, you need to keep running that electrolyzer in order to maximize the efficiency and produce the most amount of hydrogen. And you do that via a battery. So a lot of customers are coming to Gelion specifically because we've got one of the safest batteries on the market. If you're producing a lot of hydrogen with an electrolyzer, you want to have one of the world's safest batteries in that mix. So safety is key. Cost of production, also good. Some of the people online may have seen the slide deck previously, where we looked at the capex investment for Gelion for a brownfield lead acid battery, because our batteries can be made in lead acid using our partners, lead acid infrastructure. And for 16 million US capex, we can come up with 1 gigawatt hour of capacity. Compare that with lithium ion, it's $130 million. So, large differences, and that enables us to be competitive even at lower scales of production. So cost of production, safety, also recyclability. One of the great things with Gelion's batteries in terms of recyclability, we are built like a lead acid battery, and they're recycled 95% of the time. We share a lot of similar components. The plastic casing is recyclable. Vertical parallel plates, you can get to the electrodes, recycle them. And also the copper header space, that can be recycled as well. So we score very well in sustainability, and we'll be sending out the report that will back up those claims to you. And I think I'd also add in one of the other key differentiators is longer duration storage. So lithium-ion batteries tend to work, in the the half an hour to say 2 hour range, whereas our batteries, we're large energy shifting batteries, and we can shift a lot more energy over a longer period. So we're very comfortable in that 4 to 12 or 20 hour range. So there's some of the key advantages there.
Thanks, Stuart. I'm just going through here. Congratulations on the announcement. Is there any exclusivity arrangements with Aseona, assuming all goes as planned?
There's no exclusivity. I mentioned earlier that there's 4 battery techs that are being evaluated. Aseona at this stage are quite tight-lipped about the other battery techs, but there has been some conversation that potentially 2 may be selected, for example. And we're well aware, and I think a lot of the people who are quite well educated on battery storage who are in the audience today, pretty aware that there's different batteries for different applications. So Aseona may well select 2 different batteries. One could be a super high power battery for the FCAS market, and GELION for energy shifting, green hydrogen, renewables firming, for example.
Okay, the next one here, we've answered that one. What is the commercial value of this contract, assuming the test is successful?
Yeah, that's a great question. I mentioned earlier about the size of the opportunity being multi-gigawatt hour potential over time. And that's, I think that's reasonable given the expansion and growth prospects for Aseona. And if you look at, just to give you a bit of a feel for it in terms of trying to wrap some dollars around the gigawatt hours, what that could mean in terms of revenue, you could use a figure like 200 to 250 million per gigawatt hour and multiple gigawatt hours of GELION products being sold.
Okay, I think that's the last of them. Thanks, Stuart, and sorry that they all fell to you. I think that's the end of it. And thanks everybody for your time.
That's great. Thank you, Andrew. Stuart, thank you very much indeed for updating investors. And of course, if we see any further questions, we'll make those available to you post the meeting. Ladies and gentlemen, please do not close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of GELION, thank you very much indeed for your time today. That concludes today's session, and good morning to you all.